let's say they revalue it to 4,000, where we are right now. Let's see where we are. We are just below 4,100. Well, or if they revalue it to 44,222, which is 100 times, well, that 11 billion becomes a trillion. If they revalue it to 8,400 and change, that would be 2 trillion, and so on, and you get the picture. And that 2 trillion goes into the U.S. Treasury account at the Federal Reserve. The Federal Reserve has the gold certificates, and they would give the Treasury the difference from the new price to $42.22. That would be the profit. Gold revaluation, yes. And we're going to look at what happened to the economy and the markets in 1934 and 1935, because there's a major gold revaluation in January of 1934 with the Gold Reserve Act. I think it was January 30th to be exact. And the price of gold, the gold had, of course, been, most of it had been confiscated into the Treasury's coffers, and from the American public through Executive Order 6102. And I suggest you Google that and look at that executive order. Basically, it was a de facto theft of Americans' gold or money by the U.S. Treasury. Yes, they redeemed. They gave you Federal Reserve notes in exchange, $20.67 for each ounce of gold, or just $20 for each, let's say, $20 gold piece, or $10 for each $10 gold piece, and so on. You were allowed, though, to keep up to $100 gold dollars. So you were allowed to keep 5, let's say, $20 gold eagles. You're also allowed to keep numismatic coins, like collector's coins, mainly because the Secretary of the Treasury at the time, I think his name was Wooden, Mr. Wooden, was a coin collector, so he made sure that was in the executive order.
The windfall from gold revaluation didn't sit idle. The Treasury funneled this newfound capital into major New Deal programs, massive public works, rural electrification, infrastructure networks, and the creation of agencies that reshaped American life. This financial injection also capitalized the newly formed Exchange Stabilization Fund, a powerful tool still used today to manage currency markets. With new resources in hand, Washington could revive failing industries and finance projects that moved millions back into employment. What had once been deflationary paralysis quickly shifted into a period of intense government-driven rebuilding, funded largely by revalued gold rather than new debt.
Yeah, on January 30th, 1934, the price of, gold was revalued from $20.67 per troy ounce to $35. So a major revaluation. And that windfall was used to kickstart the New Deal, yeah. And it was also used to infuse capital into you could call it like a sovereign wealth fund of the 1930s. It's still around. It's called the Exchange Stabilization Fund. It's a fund that the U.S. Treasury Secretary can use to stabilize the markets. But anyway, this is what happened to the U.S. economy after that revaluation. All that cash, that ill-gotten cash that Treasury got, was used to, for loads of government programs to build infrastructure, Tennessee Valley Authority, all those things that created jobs. So I asked GPT actually. It's much easier to do that than go through loads of numbers through files. So I asked, what was U.S. GDP growth in 1932 and 1933. Those are really bad years for the U.S. economy. So it says here, real GDP growth in 1932 dropped by 12.9%. And in 1933 by 1.3%. And it says here, these reflect the final and most severe phase of the Great Depression before recovery began in 1934. So what happened in 1934? Well, real GDP growth grew by 10.8%, and in 1935 by 8.9%.
The impact was immediate. After catastrophic GDP declines of 12.9% in 1932 and 1.3% in 1933, the U.S. economy roared back with 10.8% growth in 1934 and nearly 9% in 1935. Unemployment, which had peaked at almost 25%, began a steady decline. Even Wall Street eventually joined the turnaround. Although stocks were flat in 1934, the Dow Jones surged 38% in 1935. One of its strongest annual performances of the decade. This period demonstrated a core economic truth. Revaluing gold effectively devalued the dollar, boosting government purchasing power and re-accelerating economic activity across the nation.
And I would argue that a lot of that growth was because of the gold revaluation, because it gave the government billions of dollars to inject into the economy. Yes, they didn't talk in trillions at the time, but it was massive, as you can see. So Main Street did quite well after 3-4 years of really bad economic times. So I also looked at the stock market, because Mr. Besant is saying that not just Main Street is going to do well, but Wall Street. So in 1934, actually, it wasn't a great year for the stock market. It says here that the Dow Jones Industrial Average finished roughly flat, with a slight decline overall. But it says that things stabilized. And in 1935, actually, the Dow rose 38%. And it says that it was one of the best annual returns of the decade. So yes, gold revaluation did work temporarily. When we look at the unemployment rate, so back in 1930, the unemployment rate was 8.7, and by 1933, it had risen to 24.9%. That was the peak of the Great Depression. And then from 34 until 36, it dropped to 21.7, 20.1, and 17% respectively. So that was pretty good. And we also had another couple of gold revaluations. They weren't as big and significant in 1972 and 73 by Richard Nixon. And in 72, it was from $35 to $38, and then they did it again the following year from 38 to 42.22. So looking here at GDP growth, 1970 was slightly negative, 71 was 4.37,
Gold wasn't revalued only once. In the early 1970s, President Richard Nixon raised gold's official price from $35 to $38 and then again to $42.22. But unlike 1934, the U.S. closed the gold window soon afterward, ending dollar convertibility and marking the birth of the global fiat money era. These modest adjustments had less economic impact, as the U.S. was losing gold rapidly and global monetary flows were changing. The 1970s became a decade of turbulence, stagflation, energy shocks, and currency volatility, showing that small revaluations couldn't fix deeper structural issues once gold left the monetary system.
72 and 73, the economy grew by 6.89% and 4.02% respectively. 1974, the economy shrunk by 1.95%. So it didn't really have as much an effect on the economy, mainly because Nixon closed the gold window because the U.S. was losing a lot of its gold. So it was a different period. And now what we've had though since 1973, so 52 years, is akin to, for example, your parents or your grandparents telling you, since you've become an adult, for example, that they have a fund for you, a gold fund that is worth $35,000. They tell you that they started that fund back in let's say 71. And yes, and you grow up thinking, well, I have $35,000 worth of gold, and it never changes. Your parents show you the numbers, the paperwork from the bank, and it says $35,000. And then they die, and you take over, and you realize that you actually have 1,000 ounces of gold, that they were valuing that gold at $35 or $42.22 as well, that you had $42,220, which it's a nice amount of money, but it's not life-changing. But then you realize that they were marking that to the old price, and that you could mark it to $4,000 now.
For over 50 years, the U.S. has carried its official gold, 8,133 metric tons, at the outdated valuation of just $42.22 per ounce. On the Federal Reserve's books, this appears as only $11 billion. But if marked to today's price, that gold would be worth hundreds of billions, or even trillions, depending on the revaluation level. This is like inheriting 1,000 ounces of gold, but believing it's worth $35,000 because your family never updated the paperwork. Modern reports of gold moving from London to New York suggest the U.S. may be reshoring metal previously leased out to manipulate gold markets during the strong dollar era.
And you actually have 4 million. Well, things would change, wouldn't they, if you knew that, if you realized that. Well, you could do loads with that. You could pay off your debt. You could buy a few things that you needed. You could take your family on nice holidays. You get the picture. You start spending a lot more. Hopefully you won't spend it all at once. You invest some of it. And I think that's the situation the United States is in. Yes, there is the big question, of course, of whether that 8,133.5 metric tons of gold is still in the U.S. Treasury depositories like Fort Knox, West Point, and Denver Airport. I think there's another one. And I think, though, that the U.S. is actually bringing back a lot of gold home to the U.S. because a lot of that gold that the Treasury held was leased out to the bullion banks to manage the price of gold over the last 30 years or so. I mean, you should check gata.org, gata.org. They've spoken about this policy of leasing gold out, the Treasury leasing gold via the bullion banks in order to keep the price of gold under control so it doesn't rise, because when the price of gold rises, the dollar goes down. Just like Roosevelt revalued gold and from $20.67 to $35. That means the dollar goes down. So that was the period of Robert Rubin's, and Robert Rubin was the first U.S. Treasury Secretary under the Clinton administration. That was his strong dollar policy.
If the U.S. revalued gold today, whether to $4,000 or $8,000 per ounce, the Treasury would instantly gain enormous balance sheet strength. A move to $4,000 would transform that old $11 billion valuation into more than $1 trillion. Higher revaluations would generate even larger surpluses without creating new debt or printing new money. Such a shift would echo Roosevelt's 1934 playbook: a rapid dollar devaluation, a surge of Treasury liquidity, and a boost to economic growth. With U.S. officials hinting at stronger economic performance ahead, some analysts believe another gold reset could become a powerful but hidden policy option.
And it was done through that. And GATA has loads of research about that. I think Frank Veneroso wrote about that. So they have to bring the gold home. We've been hearing, or we heard at the beginning of the year, there's hundreds of tons of gold that flowed from London to New York, and that's very unusual. So what I'm trying to say here, right now, the American public's gold, which is held at the Treasury, which was confiscated by FDR, is only valued at around $11 billion. Yes, you can look at the Fed's balance sheet and it says $11 billion, and it has been there since 1973. It might have changed a little bit because I think they sold some gold in the late 70s, but anyway, it's been at that level since then. It's akin to the story I told you about your parents or grandparents leaving you some gold and saying it was only worth $35,000. So it's a windfall, and I think that's why Mr. Besant seems to be so confident to go in front of the world and tell the world that the U.S. economy is doing well. He says here, what does he say exactly? Well, he says that 2026 first and second quarter. I'll give you whatever. Yeah, he said it will be. U.S. economy will likely substantially accelerate in Q1, Q2. So let's say they revalue it to 4,000, where we are right now. Let's see where we are. We are just below 4,100. Well, or if they revalue it to 44,222, which is 100 times, well, that 11 billion becomes a trillion. If they revalue it to 8,400 and change, that would be 2 trillion, and so on. And you get the picture. And that 2 trillion goes into the U.S. Treasury account at the Federal Reserve. The Federal Reserve has the gold certificates, and they would give the Treasury the difference from the new price to $42.22. That would be the profit.